The market continues its grind higher into the weekend. We sell our calls for a 10% gain, and now we look for our next trade setup. This is Invest with Jacob. Okay guys, so I'm back from vacation, and what a great weekend it was. We made a little money Friday selling our calls, and I had an awesome time in San Diego with my family celebrating our anniversary. Now it's time to jump back into the market and see what's going on, and we'll get into that in just 1 second. But first, if you're new here, welcome to the show guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500. I highly encourage you to hit that subscribe button down below so you can get our daily S&P updates, our trade setups, and our buy alerts. Alright guys, so the market continued to grind higher into the weekend, causing us to sell our calls as we've hit a precarious point. It's best seen in the charts, so let's jump in and take a look. Okay guys, so here we are on the 3-hour futures chart, and I just did the 3-hour to zoom out so we could see bigger waves 1 and 2 and get a perspective on why we sold our calls on Friday. So you can see coming up here bigger wave 1 and bigger wave 2, and we have our fib extension tool drawn in here, which gives us a 1.0 target of the 1-2 here at 44.55. Now that is a very common wave 3 of 3 target, which is what we're in. We've actually moved up to 44.63, slightly above this, which means that anything above here could turn south at really any time. It has hit a minimum requirement, and so we know that there's no guarantee that this pushes higher. The second reason that we sold those calls is the grind up has been very slow, and that is eating a lot of our premium. And while we could get out at 10% gains and not have to hold over the weekend, there are a couple setups we can look forward to get our money back in a better spot. And then finally, probably the biggest reason is since we came up and out of here, and we'll see it when we zoom in here, this action up toward the top has been very overlapping and very choppy and does not have a very sound wave structure to it. So it becomes very hard to count the waves and understand exactly where we're at. And that usually means a rally that's starting to run out of gas. That doesn't mean it can't still push the 90 points or so higher to hit our target, but it means it's starting to get ready to flip. And so we didn't want to get trapped in that flip over the weekend where we could find a better spot to enter. So those are the main reasons we sold our calls on Friday. It was more about protecting our capital and getting a little bit of a gain and being risk averse as opposed to gambling and getting hammered over the weekend. So let's zoom in and take a closer look at this action up here, because this is really what was telling and what caused me to exit my position. Okay guys, so switching over, we're now zoomed in on the 5-minute SPX chart. So remember when I tell you these levels, that they are the SPX levels, because we were just talking about the futures, because you could see a little better on the futures chart for a long term. But for the SPX, these are the levels that are important. So into the weekend on Friday, we entered this main resistance zone. And basically what I decided to do, since this is all choppy and there's no real discernible wave count here that I'm confident in, I wanted to give you main resistance and support levels so that you understand when the market moves through these levels in whichever direction it goes, where your support is and which way the market should be heading. So this main resistance level is fairly important for that 45.50 target. As we hit it on Friday, it looks like over the weekend here it's down 11.75 so far. So it looks like it's rejecting it the first time up. We will see if it has a small pullback and then goes up and blows through this resistance headed toward that 45.50 target, or if this is near the top and we're going to start to see a stronger move down through these support levels. Now, until we break support 1, this market is still bullish. We can come all the way down here to 44.25, basically 44.24.49. We can come all the way down to there and still have a bullish move up toward that 45.50 target. So don't get all excited if we pull back into the support zone because it's a fairly decent drop. You know, it's a 30-40 point drop here, that we're definitely in wave 4. We could be in wave 4, but until we break a major support level, there's no reason to think we're looking down. Now, should we break through the support 1 box, that should be considered a warning that we are likely to start wave 4 down if we aren't already in it. And at that point, we should be looking to try to find a short trade, because the risk reward will be outstanding, because this should be a 200 to 300 point drop down to the 41.65 area to 42.50 area, depending on where the top of wave 3 is. This could still move up a little bit, so wherever the top is, it should be about 200 to 300 points off of that. And so if we break through support 1 here, we have a great risk reward of knowing back up through support 1, we can get out of our trade, but we have this heavy resistance box here to keep us pushing down. And so we have a small amount of risk here going up whereas we have that 100 or 2 to 300 points going down. So this is going to be a great risk reward spot to short and try to get in on that part of the market. Now on the other end of that, should they come back and either hold this support zone or bounce off one of these fibs, the 0.5 or the 382, and move back through this main resistance zone, the top of that is 44.76. So should it move up to about 44.80 or so, then we should start to think that 45.50 is on the table and we are still moving higher. But given this choppy overlapping action on this grind up right here, it gives me pause that we're going to hit that 45.50 target. Doesn't mean we won't. It just means that this is not the kind of structure you want to see to get another 100 points or so and a move up. So it's basically going to be a race. Who wins? Do we get through main resistance first or do we break support first? And that's going to be what dictates which way and how high the market goes in this wave. Okay guys, if you like the information that I put out in this video and you want real-time market updates from me, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link. Okay, it'll take you over to Facebook. You'll see my group here. And once you're accepted into that group, and I'll tell you how to get accepted in just 1 second. Once you're accepted, you just click this announcements tab, scroll down, you'll see our documented trades, as well as a link to my Slack channel. Slack is just a free chat channel where I give real-time market updates. I give all of our buy and sell alerts. There's a great trading community of talented traders in there. So we would love to have you come over there and make some money with us. The only thing you have to do to get accepted, there's one thing I need you to do. You got to hit that subscribe button to my YouTube channel. So go ahead and hit subscribe down below. Once you've subscribed, come over and get my Slack channel. We would love to have you in the community so we can make some money together. Okay guys, so key takeaways for today. Basically, we're watching two levels, this main resistance level and this main support level. Whichever one breaks first is most likely the direction we are headed. So if we pull back short and then come back through this resistance level, I'm looking at 45.50. If we pull back through support 1 and break down here, I'm looking at 41.65. That is the market update for today. I will talk to you tomorrow.